Right, good morning, ladies and gentlemen. Welcome to this, the 8th meeting in 2014 of the Economy, Energy and Tourism Committee. Can I welcome all members and our witnesses and those joining us in the gallery. And I can remind everyone, please, to turn off or at least turn to silent all mobile phones and other electronic devices. Item 1 on the agenda is a continuation of our inquiry into Scotland's economic future post-2014. And I'm delighted we are joined by an esteemed panel of experts in the world of tax. Starting on the left, we have Moira Kelly, who's Chairman of the Scottish Technical Subcommittee, Chartered Institute of Taxation. David Glenn, who's Partner and Head of Tax Scotland at PricewaterhouseCoopers. Michael Clancy, Director of Law Reform, Law Society of Scotland. And Elspeth Orcherton, Director of Taxation Institute of Chartered Accountants of Scotland. Welcome to you all. And now we have about 90 minutes maximum for this session. I'm very grateful to you for coming, particularly as it's budget day, and I know you've all got other things to do today, so I'm particularly obliged to you giving up your time today to come in and talk to the committee. There's a number of areas I think we'll want to cover in the time available around the fiscal regime that might apply either post-independence or, for that matter, if there's a no vote, on the consequences of what that might be, and look at some of the tax changes proposed in the white paper. I'd remind members, if they could, to keep their questions short and to the point. And as we've got quite a large panel, it might be helpful if members could direct their questions at a particular panel member initially. And then if you want to respond to a question that's been asked to another panel member, if you just catch my eye, I will try and bring you in as time allows to make a contribution. And if we can try and keep the answers fairly short and focused, that would be quite helpful in terms of getting through the issues in the time available. Maybe I could just start off by asking a question to all of you. Maybe just start with Moira Kelly and work our way along. And this really is to do with the room for manoeuvre in terms of fiscal changes in the event of a yes vote in the independence referendum. This committee heard 2 weeks ago from Paul Johnson of the Institute for Fiscal Studies, who said that it is likely that in the event of independence, any government would have to still pursue a policy of austerity because of the public financial position that would exist. We heard last week from Professor Jeremy Peat, who said he believed that an independent Scottish government would have to apply at least as tight fiscal rules as the current UK applies, and probably tighter, because whatever currency arrangement was chosen for an independent Scotland, because of the need to establish credibility with the international markets, there would need to be a period of some years where very tight fiscal rules would have to apply. I wonder if I can ask you, what do you think is the room for manoeuvre in terms of an independent Scotland's scope for making fiscal changes? And I'm particularly looking at the question of the corporation tax. Mm-hmm. Is it credible to be able to propose a corporation tax cut in the initial stages?
Well, I'd like to start off by just stating I'm not an economist. We're tax advisors, so you have to take it with it, my response with that in mind. Firstly, we think that this would give us great opportunity in Scotland to actually derive tax legislation that is suitable for Scottish requirements. So I place that, it gives us an open page that we can actually start deriving our own and designing our own tax legislation. However, the practicalities are that we would have to watch how we were perceived, and going back to this, is saying that we noticed in the white paper it talked about perhaps a 3% drop in corporate tax rates. One of our fears was that this might lead to a race to the bottom, in that the tax jurisdictions would be going down and down and down with corporation tax. Where that might be an issue is when you then talk about your approach of we want to try and achieve such, various things with benefits, welfare in Scotland. How do you actually square that? Second point, more practically, what is going to be the effect for companies that are operating in both Scotland and the rest of the UK. How do we work out which profits are taxable in Scotland and which are in the rest of the UK? That's going to lead to administrative issues. What about companies which are operating in Scotland but perhaps have their headquarters in the rest of the UK? Even down to aspects, we thought of one aspect of individuals. Can I bring it to individuals, or do you want me to stick in corporates just now? Okay, you have the same sort of impact on individuals. One of my colleagues is employed, I'm a volunteer for the CIOT, but one of my colleagues is employed by the CIOT, which is it's a UK payroll based in England. She's employed up here. Then, taking that a bit further, giving relief, what about someone who is English but is working in Scotland, so is an English taxpayer, is working in Scotland? Say they're making pension contributions. We would have to give them tax relief for the pension contributions in Scotland, equivalent to what we would give a Scottish taxpayer. What if the pension company is actually based in the rest of the UK? So there's various practical aspects like that we have to take into account. Rather than thinking, oh yes, we can do this, we could do this, what we're more interested in is what would be the practical implications for individuals, because you would potentially have a lot more individuals having to file a tax return. For companies, how do you split the profits? And how are we giving relief? Thank you.
David Glenn.
Chairman, I think your question was about the ability to afford, let's say, a tax cut in corporation tax. And the way I view that, it's all about that classic fiscal equation between how much you're going to spend, how much tax you're going to raise, how much you're going to borrow. And some of those at this stage are unknown clearly as to what will be the level of spending that we'd want to cover. What will be the level of borrowing we'll want to take on board. That will be for whatever new Scottish Government to decide. Also be determined by level of debt that is taking on from the UK. So those are going to be some significant factors in determining what you then are going to want to achieve from a tax perspective. And then when you've established what it is you think you're going to need to establish from a tax perspective, you're then going to have a range of taxes to look at as to where best to raise that tax from. Now, clearly, in any economy, and particularly in the UK, the biggest tax take comes from personal taxation. Therefore, your question about corporation tax needs to be seen in the context that quite often corporation tax is really not a major tax take for the economy, and therefore it can be used as a lever to encourage other activity, be that inward investment or whatever. And therefore, the ultimate question is, could we raise the level of corporation tax in the UK, in an independent Scotland? I'm quite sure you could. It's then a matter of how do we square that off in terms of, because we raise taxes elsewhere, where's that going to come from? Or will that stimulate sufficient other economic activity to square away the rest of that equation? And I think there is a different scenario there depending on the lens of the corporation you're looking at. You've got to think about indigenous business and whether that is mobile or not. There is some business which is clearly not mobile. Let's take the Scotch whisky industry. It has to be in Scotland for it to be Scotch. So they're going to have a different lens from other businesses who could potentially, where they're more, say, people-based, can start thinking about moving their headquarters. Or even more importantly, perhaps, is on the investment front. Now, as it happens, I spent the week before last out in the west coast of America visiting various companies. Every single one of them, I had a conversation about Scotland, potential independence, what the impact might be for them. Now, they look at this situation with a completely different lens. From one point of view, they are large multinational corporations. To add another country to a list that they will have to deal with, it's actually not a big deal for them. They deal with so many. So if you add another one to the list, that's fine. We'll cope with it. We cope with it elsewhere. What level of corporation tax? They deal with varying levels of corporation tax and other taxes, so they can handle that. The key for them, and this was the case with every single one I talked to, every single one of them either already has significant operations in Scotland as part of the UK, or indeed are thinking about moving more of their operations to Scotland or the wider part of the UK. Why? Because they see the current UK corporate legislation is becoming ever more benign and favourable to international relocation, and for them to use the UK as a hub, as it were, whether that's to centre European headquarter operations, or indeed in one instance I can think of, it was a straight fight between, do I relocate to Singapore, where I'll get a 0% rate, or do I relocate to Scotland, where with current UK incentives on things like innovations on patent box, where I could get down to an effective rate of about 10%, that equation becomes really powerful in terms of the UK, because what we've also got is a workforce that goes with it. So these are the kind of equations they're looking at, and therefore the question for them is, what will Scotland look like in that lens? We like the current UK lens. How much will Scotland differ as an independent nation? So you have these different lenses based on which country you're looking at. So to come back to the nub of your question, can you lower the current rate of corporation tax? I'm sure you can. Working through the implications of all of that, there's many different things will get you to whatever the answer to that's going to be.
Okay, thank you. I've got members will come in with supplementaries, but I always want to hear from all the panel first of all, and then we'll come back. Michael Clancy.
Thank you, Convener. As the least numerate on the panel, I think it's quite a difficult question for me to answer as to what the impact of a 3% cut in corporation tax would mean. But clearly, there are issues about any complex tax system and the simplification of that tax system, and how that has an impact in terms of those three components which David referred to of income, borrowing and expenditure. If we take the view that immediately after I-Day we will still have the existing tax regime to work through, and for there to be a big debate about the nature of the tax regime which an independent Scotland, on the basis that there's going to be a yes vote, would construct. And that, of course, would depend upon who makes up the government in the independent Scotland starting in May 2016. So there's a lot of thinking to be done by the political parties about what they imagine to be the best tax regime for an independent Scotland in that eventuality. And we know what the Scottish Government thinks, because the White Paper sketches out a lot of their principles and some of their concrete ideas. We heard yesterday what Joanne Lamont thinks is the proposal for additional taxation in the event of a no vote. And we're waiting to hear from the Conservative Party, and we've already heard what the Liberal Democrats have in terms of their Home Rule proposals. So I think it's an issue which the political parties have to think about. They've got, I think, to work to certain principles of consultation and consideration. And when that takes into account the views of people who have an interest, not only experts like those around me, but also anorexics like me, and also the people who are going to be affected, the taxpayers who are going to be affected by this. When it comes down to it, I think in our paper we said that if Scottish rates of tax were markedly lower than the rest of the UK, it raises the question of whether Scotland would be able to raise sufficient revenue to maintain adequate public services. And if we focus on that, of being markedly lower, then it may be the case that Scotland would be a desirable place for some businesses to come to. We could become the Delaware of Northern Europe in some respects, and attract businesses in, but there might be a cost to that, because we may not be desirable in other respects, because a lowering of corporation tax might have to be filled by an increase in tax in other areas. So I think it's a very complex question which you ask. I don't think anyone has a monopoly on wisdom in this, and I certainly know that I don't, but it's something where we're going to have to start thinking in very concrete terms, and people are going to have to start showing their hands about the proposals which are going to go into the manifestos for the 2016 election.
Okay, thank you. Councillor Thurston.
A lot's been said, and there's none of it I disagree with, so I won't repeat any of the points made. I do think it is important to think about the consequences of reducing corporation tax. You can look at the various studies which might say if you have a 3% differential 7 years on, you might get a number of jobs created. But I think you have to also think about the wider consequences. How do you fund the dip in corporation tax, and how likely is it that a 3% differential tax rate will be maintained? The pattern of corporate tax rates across Europe is one of steady decline over at least 10 years, if not 20. But what's happened is there's been a shift in taxes at that very general level from corporation tax onto labour taxes and employment taxes, and also onto property taxes. As far as Scotland is concerned, I have had a very quick look at the most recent GERS figures, and whilst you can talk about percentages of GDP, I think the ones that jumped out for me are where there is tax revenue per head of population calculated, and the historical piece is that oil tax revenues has made that a higher figure for Scotland than the rest of the UK. But it's also very relevant to look at where the spending levels per head have been, and there's an interesting change in I suppose in the pattern of spending per head relative to the UK, and where the tax revenues have been declining and the spending has been at quite a high level, there's actually the deficit. Now we've got a UK deficit and a Scottish deficit. But it says to me that if taxes are to be cut, they either on corporates, they have to be raised somewhere else, or there are spending implications. But that's for the politicians to make their decisions on. I think there are some other consequences of cutting corporation tax to be borne in mind. First of all, it's being done to, I think, attract inward investment. But you have to consider that a bold cut in the rate affects every company already in Scotland, who are here anyway and who may not be mobile. So the question is, are you making the best use of your tax powers by cutting across the board, or should you do what a number of jurisdictions have done and make a very focused relief available, as opposed to something that's across the board, because that is actually where you want the investment spend to be. David has talked about what's known as the patent box regime, which is very much about attracting technological developments. And that, again, is a decision for the politicians, but understand that a more focused relief may be more effective in doing what you're wanting to do. And finally, there are behavioural impacts of tax rate cuts. The more that corporate taxes are reducing or have been reduced in the UK, the greater have been seen two things. One is tax motivated in corporations from the self-employed businesses and partnerships, and I suppose the invention of more what some might call tax avoidance structures to try and get to a corporate tax rate. So there's always a behavioural piece you don't see. But there will also be profit shifting to consider, where businesses operating across the UK tell the tax authorities or make submissions that will try and favour, under the rules, of profits taxable at a lower rate than a higher rate, which has consequences not just for the tax yield, but for the amount of spend your tax administration has to have on actually policing that, and the administrative burden on businesses to prove that to the tax authorities, and that is all companies across Scotland. So there's a number of complicated factors to answer.
Before I bring others in, can I just ask you one follow-up? Would you agree with David Glenn's comments that the current UK fiscal regime is generally beneficial and attractive to corporates in a European and global context?
That's certainly the feedback we get from members.
Okay. I'm going to bring a couple of quick supplementaries, one from Marco Biaggi and then one from Chick Brody.
Just a question for Moira Kelly to go all the way back to the first submission there. You were mentioning the issues of people that work in one area and cross-border issues. Although the scale of that would change, I take it that's already the case. I know, for example, someone who I met last week who lives in Edinburgh in the constituency but works in the Danish zone of the North Sea and is taxed under Danish law. So I take it those sorts of arrangements exist at the moment and can be dealt with, and there are established procedures for dealing with them, but it would simply be an issue of scale.
Yes, it would be an issue of scale. What we would find is that the UK already has double tax agreements with other jurisdictions, and it would be, what we would feel would be that there would be more people brought into it. So there's more likely to be folk living in England, living in Scotland and commuting to jobs. What you would then find is that there would be the probability of more tax returns having to be filed, with obviously an effect on Revenue Scotland.
Chick Brody.
Yeah, just very quickly on that point. I ran 8 companies across Europe under one umbrella. I never had a problem in interchangeability of staff because they knew the country of residence, the country where they paid tax, and that applied particularly in the case of Belgium and Holland. And you know, I think it's a myth to a large extent that these problems can be overcome. Can I just come back to this business about Mr. Glenn made the point about the UK tax regime is helping investment. I've just got figures just handed to me that in 2009, Scotland's percentage of inward investment was 8% of the UK total. 2010 it was 19%. 2011 it was 20%. 2012 it was 16%. So we're already doing something right. I do not think that these figures will actually be on the basis that we increase or reduce corporation tax. In fact, these figures as a percentage compared to the rest of the UK will increase.
Actually, who's to say in that respect? Because it really depends as to how whatever the new Scottish legislation, to the extent that it changes, because let's not forget the current plan is UK legislation rolls over on independency to become Scottish legislation. So to start with, we're exactly the same. It's to the extent it changes and to the extent
we're exactly the same today, and look at what's happening.
Yes, and that's what we're seeing overall and right across the UK in terms of increased inward investment. If Scotland's happening to pick up an increased share of that right now, then there may be particular circumstances for that. Whether that continues going forward, who's to say? But very much so, the regime for the UK as a whole has changed fairly dramatically, probably over the past 5-6 years as legislation has changed.
Okay. Sorry. Elspeth Horston.
If I could just add to David's comment, and it might be relevant, one of the things that probably enabled your businesses to operate on that basis was a knowledge of the rules, but also the international networks of tax agreements between all the different authorities that did the tiebreaker if you worked in Denmark and the UK, who decided where you paid tax and how your offset rules applied. And it will be important as well for the corporate regime in Scotland that a corresponding network of international tax agreements would apply as well. So it's not just the domestic stuff, it's the agreements you can reach with all international partners, 100 or so.
Okay, thank you. Right, bring in Dennis Roberts.
Yeah, thank you, Convener, and good morning. When the convener introduced you, the panel, he said an esteemed group, and it actually sort of brought to mind in my own thoughts the Fiscal Commission Working Group. Again, I think made up of fairly esteemed members. 3 in particular, I think, based on the sort of who would have I think, a great deal of experience and knowledge within the taxation system, and that would be Professor Hughes Hallett, Professor Merlees, and Professor Stiglitz. And I'm sincerely hoping that you would probably agree that they are certainly members with a great deal of knowledge. Based on that, the Fiscal Commission Working Group, in terms of looking at moving forward in a modern Scotland, were suggesting that the principles that they could look at was a taxation which would be simple, and it would have neutrality, stability and flexibility. All principles which were in the submission from Moira Kelly. I wonder if you could maybe just expand, because you were suggesting that you agree with these principles. Could you maybe just expand on what you, on those particular principles and why you agree with them?
What we feel is that to have a good tax regime, you have to have certainty, so that when individuals or businesses engaged in a particular activity, it's easily understood as to what the tax implications will be. There should be certainty again. If you are going to engage in a particular activity, this is how it will be taxed. What that does is it makes the administration of the tax easier. It leads to an understanding of how the tax is going to operate, and hence the entire tax regime, it's easier to operate, so there's savings for both taxpayers and for the revenue-raising body.
Just let David Glenn come in.
Can we do a follow-up to that? Because I think that stability point is quite key. Because again, examples where I've seen in dealing with my own clients, I do deal with a fair number of inward investors, and I have seen them when I'm discussing the implications of moving to Scotland and the UK, trying to understand the system, where they end up having some hesitation on whether to make that decision to invest is when they see tinkering in tax legislation so much as it affects them. So whilst there might be a piece of legislation that comes in which in the face of it looks favourable to them, they're always at that point about, yes, but how sustainable is this? Is it going to last? And when they see tinkering, which happens quite a lot, they then become disbelieving of the fact that that benefit will be long-lasting, and therefore they're making decisions to invest for an extended period, and not, it's not about the matter of the next 2 or 3 years. They've got a longer outlook on that. Hence, them seeking that stability and certainty.
And just to add something on to that, you have the contradiction between trying to perhaps tinker to achieve certain economic objectives versus trying to have as simple as possible a tax regime. And it's up to you guys to decide where you want to get to.
I'm sure it's a challenge that Mr Swinney would actually relish. At the end of the day, so do you think the current tax system then, presided over Westminster, actually, do they follow these principles that we've just outlined there in terms of simplicity, neutrality, flexibility? Do you think the current tax system presided by Westminster actually follows those? Moira Kelly?
That's a difficult question.
It's not really.
Yeah. I'm sure their objective is to try and get a simple tax regime. However, the practicality is that as soon as you start to try and encourage certain behaviours, you try to incentivise inward investment. That's where people like me get a job.
So a simplified tax system does you all out of job.
Well, yes. When I started in taxation, our legislation was possibly about this. It's now running to about 5 or 6 volumes. Yeah. That's a simple tax system.
Michael Clancy wants to come in.
Well, I think I might be slightly older than you, and I remember when the law was written on stone. But I mean, all law has expanded over the last 30 years or 40 years. I mean, we're not just talking about tax law, but we have a national propensity to create law to deal with problems which we perceive in our society, and tax law is not immune to that. And so therefore, when one is talking about ideas of a simple tax system or one which is, in the words of the white paper, neutral, stable and flexible, then these are great principles to guide one. They could be applied to almost any legislative endeavour, but to have a particular focus in tax because tax law has acquired the barnacles of complexity simply because of the chase around avoidance and the need to deter evasion and also to meet those objectives, which might be socio-legal in nature to incentivise certain types of activity or to de-incentive certain types of behaviour. So I think that it's quite difficult for us to say that you can immediately have what would be described as a one-page A4 tax code. That's not going to happen because people with their advisors, corporations with their advisors, will design mechanisms so that they can, quite legitimately, pay the tax they owe and not pay tax they don't owe. And we've got to remember that income tax, for example, is supposed to be a tax on income. If one were to go back to the origins of taxation, you know, they weren't meant to be permanent things. They were meant to fund armies in 18th century Europe. They weren't meant to be permanent features of life. But as our society has grown more complex, as the demands on the body politic have become increased, then we have to raise money to pay for it. And as soon as we start doing that, then complexity comes into it. So we have hopes that any new tax arrangements will comply with these principles. I think in our paper we quoted Adam Smith's maxims of certainty, convenience, efficiency and proportionality, which is the ability to pay. The world is different from Adam Smith's day, where we do live in a more complex society with a welfare state, and all of the public endeavour needs to be paid for somehow. What I can say is that our experience of dealing with the Scottish Government over land buildings transaction tax or the landfill tax has been a very positive one. The engagement which we've had with Scottish Government officials has been very helpful, and dealing with the aspects of the cross-cutting nature of these taxes between, let's say, Registers of Scotland and the Government. These are augurs for future hope, but we've got to bear in mind that the responsibilities of the government might change with more powers, whichever way we look at it, whether it is independence or a no vote, and we need to maintain that hope.
Yeah, I just wonder if we'll probably sort of go down this line here. Margaret Hodge, MP, Chair of the Public Accounts Committee, she recently stated that the tax law is hopelessly complex and outdated. Do you agree with that, and why? It's hopelessly complex and outdated. Do you agree with that from Margaret Hodge? Mr. Glenn?
I don't know if I put the word hopelessly against that.
That was her words, not
yes, absolutely. Complex indeed. Outdated, perhaps, and I put that in the context because it links in with one of the other maxims you mentioned there was flexibility. Outdated and the need for flexibility because we have a changing world. We are now in a digital age and the internet age. Tax legislation, by and large, does not cope easily with that, and only now are we starting to pick up and deal with that. And there's much more to be done. There's a lot of work being done at the OECD level to look at how the world copes with the ever greater internationalisation of business, because I mean, borders are really don't exist in the electronic world, and how do you capture those borders in that age? And therefore, yes, to that extent, the legislation is outdated and needs to catch up. And undoubtedly, you always have that where you know, you have. I wasn't around when they were funding the army in the 18th century, but you know, if the legislation has you know, been developed since then, as you tinker, you will undoubtedly leave behind some fairly archaic bits of legislation there which don't really sit well. But you know, to put something in place to rectify that would be something fairly substantial. But it does bring you on to this flexibility point, which is a potential plus point looking to an independent Scotland, because you know, if you then have the flexibility to react quickly to what's going on in your economy, whether that's to, you know, the industries that are important to Scotland, oil and gas, financial services, the whisky sector, if it can be more specific and directed to them as an independent nation, then perhaps that's a positive.
Are suggesting, you know, applying the 4 principles in terms of the simplicity and neutrality, you know, being stable and flexible,
yes.
Which is, again, I think was the principles that Adam Smith actually founded the modern day economics on anyway.
Yeah.
Any other member wish to comment?
Yes, I was just observing, we wrote as ICAS a paper a couple of years ago as this debate was kicking off, and you may or may not be interested to know that the current UK government also has its principles, which include, as I look at them, being certain and predictable. Taxes should be simple to understand and easy to comply with, fair reward work, and it goes on. And I'm not sure that the principles in themselves, whilst helpful, necessarily completely determine the shape of a tax system.
But this does not demonstrate the key problem here, that it's very easy to have a soundbite saying we need a simpler tax system, but of course all the changes that are introduced in response to some issue or lobby, and therefore the minute you say we're going to take that away, you will have a backlash from whoever the beneficiaries are.
Exactly, and there was a quote in the full Murley's report, which it was the same Professor Murley's, but his original Tax by Design, which was a lovely 800-word read for people like myself who are into that. But he did make the observations that proposals for tax reform are, of course, constrained by politics, not least the unfortunate observation that those who lose from tax reforms tend to be vengeful, while those who gain from them tend to be ungrateful. And that's a quote. But I think it brings the whole thing back to the practicality that there can be a great wish to do things, but it is much more difficult in practice to make the decisions and play-offs, and it is complex, and that's why you have complex legislation. So it's not that someone thought, oh great, we'll have another bit of complexity. Sometimes, although I have to say, we think HMRC does think that way, which may be unfair to HMRC, but we're talking about tax administrations and governments, and everywhere has this issue.
And we're also looking at, within the committee here, the post-referendum. And it would give an independent Scotland an opportunity, perhaps, not to start with a blank sheet of paper, but to actually simplify the taxation system, would it not?
Same opportunity exists, whichever parliament you're looking at, and it is for the parliaments to take forward whether they really want to commit to adopting a simpler system or not.
Okay, Michael Clancy, do you want to come in?
Well, I think you know, one can't forget that the tax law simplification project has now been running at a UK level for more than 10 years. And I don't think anyone, as Elspeth has pointed out, sets out with the idea of making a system unduly complex. But in responding to situations, either through case law or through other legislation or impacts in terms of the economy, it's quite important that we do have the capacity to change, and change may bring with it complexity. And in terms of flexibility, surely a tax law system has to be flexible, but I would caution against an easy flexibility, if that's not too much of a contradiction in terms, because, of course, the rule of law comes into this. And we are dealing with a body of law, and flexibility in the law needs to go through the proper process of scrutiny and consultation, and we can't just have ministerial diktat saying this is how the tax law will be changed because we've got a principle of flexibility. I think we've got to balance it, and the white paper does not address the impact of the rule of law, nor indeed do the principles which the UK government enunciate in connection with adherence to these principles. But we have to bear in mind that this is part of the bedrock of what we're dealing with.
One thing to add to that is that we've found it very refreshing, the collaborative approach so far in the development of our Scottish taxes legislation. And I would be suggesting that that should continue. To put it in context, when the UK government was looking at the cash accounting system for small businesses, we had made suggestions as to a simplified regime. Now, what did happen was the tax authority went their own way, and we ended up with a far more complicated regime than we should have had. So it's to bear this collaborative approach. We're all working together for as good a tax regime as we can get. And I think it's to take that forward, this feeling of collaboration.
Okay, right. Well, a couple of members wanted to ask something, so they'll be brief, please. We need to move on. Mike McKenzie.
Thank you, Convener. You've placed quite a lot of emphasis on consistency and certainty. I just wonder, and I know that none of you are oil economists, but I just wonder, given that oil is, a very highly taxed industry, oil and gas, if you'd care to comment, knowing that there have been 16 major fiscal changes over the last decade, culminating in George Osborne's quite infamous tax raid in 2011, what effect would that have on any industry?
Pick that up. There's actually, in that context, a recent change to legislation which is currently being worked through that's affecting the oil and gas sector, which came out in the autumn statement. Basically, in simple terms, in relation to the deductibility that they'll be allowed for leasing costs when operating in the North Sea. And what we're beginning to find, and I'm talking from experience here with some of our own clients, this is having quite an impact on them in thinking about the ability to continue in the North Sea. I think where the North Sea is at the moment, in our view, is we've seen the kind of larger players have moved out of the North Sea. Their cost base does not allow the North Sea to be as profitable for them as they need to be, and therefore the kind of secondary drillers have moved in. With a lower cost base, it's economical for them. But with some of the tinkering of changes in tax legislation, even they're beginning to feel the squeeze as to whether it is profitable enough for them. Because let's not forget, these businesses have choices. There are other places in the world that have oil. There's other places that afford them a greater return on their investment. And therefore, we've got to be very careful in terms of we can't just look upon the oil and gas sector as a cash cow, which we can go and raid every now and again, just to, when we're short of a bit of revenue. And I guess that applies for all the significant industries in Scotland. But I just wonder if the oil and gas sector in particular has been picked on in that respect, and we just need to be very careful, I think, going forward about how we look after that industry.
Benji.
Both Mr Clancy and Ms Kelly referred to the positive experience of the development of the Scotland Act taxes. Do you think that's an intrinsic feature of the proximity of taking these decisions in Scotland and helped by the scale, and whether we're looking ahead to independence or just greater extension of tax powers, as I believe other parties are suggesting? Is that a positive of bringing that decision making here to the Scottish level?
I think it may have something to do with scale, because, of course, if one is trying to influence a finance bill in Westminster, one is one of thousands of voices, whereas in Scotland one might be one of hundreds of voices, and it is quite difficult to achieve change in the UK Parliament through amendment to a bill I think in my experience, I've managed to change one aspect of tax law, which was in the original Scotland Act of 1998, relating to the definition of a taxpayer. But I think certainly if the civil servants who are dealing with a matter are less than 5 miles from your office, if you have a smaller group of people who are wanting to contribute to the debate, then these are two factors which allow for a more open discussion. And of course, a participative parliament such as this, where those who have views on legislation to bring to a committee's attention, to bring to the Chamber's attention, we found that to be a positive experience, and one which I'd like to think we've made a contribution to the law through. So therefore, yes.
Maura Kelly, do you want to comment?
Yes, thank you. Coming from Aberdeen, I'm not 5 miles away. However, I wonder if it's also a mindset. We've got this new baby that's here, and we're all trying to get the best tax regime. We're all coming at it from different sides, saying this, we want to make this as user-friendly for revenue, for taxpayers as possible. It's very collaborative, very refreshing. Another aspect, I think, and I think it's maybe part of the Scottish psyche, is education. Is the proposals for bringing in education into schools. What you achieve with that is you create individuals who see that they have to buy in to their country, to their government, and this is their duty, is taxation. And I think that is to be applauded. And if there's anything we can do to facilitate that, please get in touch.
Okay, we're already halfway through our time, so we'll need to move on. I'll bring in Margaret McDougall.
Thank you, and good morning, panel. Really, around taxation, and from what I've heard this morning, there's certainly more questions than answers. Could perhaps David Glenn give me an answer to my question? Is, if we were to assume that we roll over the current UK tax system to and in the unlikely event of an independent Scotland, but if we assume that, how long would it take to set up a new tax system, and what would be the cost of that? To David.
Length of time and cost. I'm not sure I'll be able to answer the question in terms of cost. I don't have that kind of data to hand, but I guess it comes down to how much a Scottish Parliament or Scottish Government would want to tinker with the legislation that is handed over. I think you've heard from other the panel members here in terms of the consultation process that has gone on with the existing devolved taxes, the Scottish income tax, land building tax and so on. Whilst it's been very collaborative and so on, I think there would be one comment was it has taken probably longer than might have been expected. If that process were to be repeated as you seek to amend further tax and legislation, can't keep to that similar kind of timescale because it will take too long, and therefore there needs to be something, and that might just be something as the Scottish Parliament and so on gets used to dealing with this sort of thing. The processes will improve as it becomes a slicker operation. As I say, it's kind of difficult to. I certainly can't answer the one on cost. Difficult to answer the one in terms of length of time, other than to reflect on what's happened to date. It's probably taken longer than we might have anticipated. Of course, it's been very collaborative and a fairly run process, and therefore the timescale could be an issue. There's also then the issue as well as the legislation that's getting the infrastructure sorted out as well, because I think the initial plans are essentially that is outsourced to existing UK revenue HMRC resources, and therefore is about setting up the back office functions of the Scottish revenue to support that as well. And therefore, I don't think we could equally run with too long a system where you've got a devolved tax system but relying on effectively what will be a third party to run that for you, and therefore that's got to run at the same time if you're going to make it as efficient as possible.
Yes, just to contribute, this is an area from the Institute's perspective we've been asking questions and having a look at, and I'll share the outcomes of that. I think one of our concerns is it depends how much you move, but if you're assuming a full independence and complete transfer over, as David says, it will be 3 years, if not 4, from the passing of the Scotland Act to the implementation of those powers, and the initial 2 taxes are probably the simplest 2 taxes you could take to devolve. They are building the Land and Buildings Transaction Tax on existing operating structures with Registers of Scotland and SEPA, and so there hasn't been the need to build a huge organisation. If you're talking of full independence, you have to start with the perspective of what is it you want to end up having. Even on a kind of population share percentage, that would mean something like 6,000 HMRC staff in Scotland. I believe they've got more than that at the moment by a few thousand. But HMRC isn't organised geographically. So all the oil tax experts, I think, still sit in London, and policy guys are there. So you actually want them up, but you might have people in Scotland who are dealing with matters south of the border. So it's not an easy change, and you're actually having to build a 6,000 person organisation that generates all your tax revenue from scratch. So you don't want to rush it, but you need it in quickly. So it would be quite a complex process. My guesstimate, I've been asked this before, is nearer 10 years than 4. Maybe not quite 10, but somewhere in the middle. But I believe even in the white paper there isn't an aspiration to have everything done in the first period of a parliament elected afterwards, but I stand to be corrected on anything in the white paper. In terms of cost, there's 2 approaches to it. I think the white paper says a small proportion of annual revenue. Now, small at 1% would be 650 million, at 5% would be, whatever that is, 3 billion or so. I'm not aware that there is a costing done, but I suspect there might be more than that broad brush approach. But it depends how you look at cost. And when, for example, East and West Germany reunified, they knew there was going to be a cost. And they costed it. And they introduced what was called the solidarity charge. And they say, this will cost us, and this is what it will cost us. A solidarity charge was an additional percentage tax on income and companies paid for a fixed number of years. So it was upfront. You want constitutional change, it will cost you, this is what you're paying for it, and people went forward. So cost is one of those things. It depends whether you choose it and how you look for it. But there will be substantial administrative effort required, and it will not be cheap.
Talking maybe 5 to 10 years to bring it in, and the cost, well, there would be a tax of some sort. We would all be paying for it at the end of the day.
Well, who pays for what on the devolution negotiation is not something for me to say, but I don't see how you can build a system that is new. If you're going to take the opportunity to change more, build a better IT system than HMRC has, and frankly I don't think there's anyone in HMRC would want the systems they would have. They probably look and say, what a great opportunity to get something new and different. But new and different big IT systems cost. And that's just a matter of fact. The other piece that is very relevant, I think, is also to consider how the tax and welfare systems at the moment from the UK are linked and integrated, and what the proposals would be to actually deal with that. That's not something we've looked at, but that becomes quite a complicated issue.
Do I perhaps ask another question that's around taxation, maybe to Moira Kelly? We've heard this morning from the panel that large multinational corporations are already dealing with lots of different tax systems. and they cope with that. We've heard from previous panels that small businesses are concerned about, you know, the different tax regimes that they would have to work within if there was an independent Scotland, and you know the difficulties, the bureaucracy, the administration, the costs, the implication that would have on small businesses, because small businesses are a very large part of the economy in Scotland. So could Moira give comment on that, please?
Yes, as David was saying, it's obviously large businesses which are multinational by nature. This is something that they just fit in. But, and as Chick was saying too, you have companies, you bite the bullet, you deal with the legislation, you deal with operating in more than one jurisdiction. It's for our smaller businesses which form the vast majority of our enterprises in this country, who will not have dipped their toe in the water, so to speak. They'll be dealing with, they'll be in the main operating in the UK. And I suspect that this will be quite frightening for them. Just looking at, well, how do I handle my employees, because they've never had to deal with this before. And Chick is looking up and he's going, it's okay, it's okay. Yeah.
Hold on a second. It's
Yeah.
really question time.
Right.
Yeah, yeah.
I've only had-
And so I think they'll find this quite, you know, frightening to think, well, how do I handle my employees? How do I handle the fact that I'm now having to operate in another jurisdiction, the rest of the UK? And it may be that a lot of it is more psychological. Certainly there will be another level of burden on them because they're having to deal with different jurisdictions, but it's the reality and practice as to how much that would actually be for them. I think maybe psychologically it's more of an issue for them because we have the advisors who can easily advise them on that, and there's also there's a heck of a lot of software etc. out there that will help you with this. But it's even just the practical aspect. It's the costs around that, it's the admin costs around that, and even taking it down to its nitty-gritty is, if we have to, how do you split the profits between profits generated in Scotland and profits generated in the rest of the UK?
Yes, I just going to add, and I think you probably touched on it just towards the end there, Maureen. I think the real issue for business is just the additional compliance cost. Ultimately, there'll be new sets of rules you have to pick up. You'll get to know them, you'll get to learn them and understand them, but it will generally come with an additional compliance cost in dealing with that. And that's the issue for them, because we know business is always about trying to keep their costs under control. I think to help with the fear factor, certainly an independent Scotland could perhaps have a light touch approach in the early years, to allow business to get used to that. Now, we could deal with that, but there will be another side to this, which is you'll have Scottish businesses post-independence who will effectively have what will become branch operations in the UK. The question, would the UK then have an equally light touch approach to allow these businesses to get up to speed? So we might be able to control it from a Scottish angle. We might be looking for our neighbours in the UK to take a similar stance, but I think the real issue for them is just that additional compliance cost and understanding how they're going to deal with that and to what extent that will be, and clearly that proportionately has a bigger impact on smaller business.
And that's without even thinking about the currency, if there's a different currency or anything.
Indeed.
Which would be an additional component.
Yes.
Something to do from Mark Biaggi, and because I need to let Alison Johnson in before she goes.
Thank you. We were talking there about administration costs. I have a table here that shows the cost of collection. The UK currently has greater administration costs than Sweden, Switzerland, Iceland, Denmark, Austria, Turkey, Finland, New Zealand, Israel and Spain, and that's averaged over 3 years. So it's an important area here when we're thinking about whether we can make taxation more efficient. Do you think the HMRC could be made more efficient than it is at the moment, and are there inefficiencies there that we could address? anybody? Well, I think you were the one that was talking about the administration costs.
Yes.
So best for you.
HMRC administration costs have been higher, I think, than they could have been over the life of, I think, this Parliament, which is when austerity has come in. They're cutting their staff numbers by 25%, I think, is the final aspiration, and that is the biggest element of their cost. So how that translates in that table, I'm not sure. The administration depends on what you're administering as well. In terms of, it goes with the complexity of the tax system to a certain extent. I think there is opportunity for it to be more efficient, but it goes with what is it you're actually having as your tax system, how effective are your IT and data sets to actually deliver what you want to do. I deal with our HMRC policy teams quite a lot when they tell me with considerable frustration, for example, that their IT systems don't necessarily let them do or give them the information they want because they've been set up on a piecemeal tax-by-tax basis, for example. So I think there are probably legacy issues in there as well. So the opportunity is to change that. But that's where it's coming from. If you're going to build something new, you just have to accept there might be an upfront investment to get there.
Right, okay, Alison Johnson.
Convener. Probably carrying on the question of costs and opportunities. Moira Kelly, in the written submission from the Chartered Institute of Taxation, it suggests that there are frustrations with the current UK government approach to taxation, and the example of the cash accounting scheme for small businesses is used as one that appears to have ignored many of the practical views of tax specialists and resulted in a far more complex scheme, and goes on to say that the differences increasingly appear to drive avoidance behaviours and create further complexity in the tax system. Now, we know that avoidance and evasion loses us tens of billions of pounds in uncollected tax. Do you see an opportunity here? You know, we're hearing about costs of setting up a new system, but do we not have an opportunity here to design a fairer, more equitable, more efficient system? And given the fact that we have all this revenue that's lost to us every year, we do have an opportunity to change that. And you know, even if you think about all the HMRC staff who have lost posts and perhaps haven't added to that efficiency, do we not have an opportunity here to make sure that, I think Michael Clancy was speaking about people who'd like to pay the tax they owe and don't pay the tax they don't owe. You know, that's not always the case at the moment. So regardless of you know, colleagues' concerns about the cost of setting a system up, is there not an opportunity here in the long term to design a far better, far more efficient system than the one we currently have?
Indeed. We have always said that we've got this fantastic opportunity. It's trying to achieve, we talked about the fundamental principles of and if you can get legislation that encompasses that it gives certainty, that is easily understandable. You give, and I'm thinking about fairness from both sides, from both the revenue side, but also not forgetting it's from the taxpayer side too. If you can derive legislation like that, giving you certainty that when you look at the legislation, that's what it means. Not just that perhaps when it was going through Parliament, the debates indicated we want it to have this effect, but unfortunately because the legislation that ends up on statute book doesn't quite reflect that. If you can get well-drafted legislation, what you then achieve is that there's less wriggle room. People know, if I do this, taxpayers know, the tax authority knows, if we do this, this will be the effect. And that's what we've been trying to assist with in the taxes so far, the legislation so far.
So you obviously have concerns that current legislation does allow too much wriggle room, and perhaps when it's being drafted more
you really need to make sure that you're working with the correct people to get the legislation just right.
Indeed, and I think that's one of the advantages of what's happened so far, is that because it's a wider demographic of who's involved in actually assisting with the drafting of the legislation. Obviously, we are not drafting the legislation, but we're feeding into it. So perhaps you're getting the understanding of people who are actually advising taxpayers, who are taxpayers themselves, obviously, as to what they've seen in practice. And this would assist taxpayers.
Glenn, you want to come in?
Yes, I'm always a little wary when avoidance and evasion are so closely associated, and I would like to be absolutely clear: avoidance is legal, evasion isn't, and certainly evasion is something none of us would like to see. Avoidance it often depends on a person's lens, and what is avoidance is working within the legislation and doing what the legislation allows you to do. If you don't like what the legislation allows you to do, the power is always there for you to change that legislation. So let's be clear on that. In terms of the, if you like, anti-avoidance, well, we of course have through the Scotland Revenue Scotland Powers Act at the moment. We've got the draft going through with the draft of the Scottish General Anti-Avoidance Regime, which has been drafted at the moment, and my firm have certainly commented on that, and I think others have on the consultation. And one of the issues there is we've already got a differentiation. Now, sorry, just to be clear, that is to cover the currently devolved taxes, but would most likely apply post-independence as well. But here we will have the situation, if we remain as part of the UK, a different general anti-avoidance regime applying to those devolved taxes as opposed to the general anti-avoidance regime that works for the rest of the UK. And perhaps the Scottish proposal at the moment goes slightly wider than the UK regime. And actually what it does is introduce that level of uncertainty that we've referred to earlier in terms of what business are looking for. Business accept they have to do things right. Business accept they have to do it within the legislation and not to avoid tax. But they also need to know that they can operate with some certainty that the legislation as written is what is going to be applied to them, and you don't have a kind of tucked away piece of legislation that kind of gives the impression of, if the revenue or the government don't like it, we'll just apply this to then change the outcome that you thought was going to apply into that legislation. So it's got to be very careful. It's perfectly possible to construct something, and there's a great deal of work done by Graham Aronson and his committee in looking at the UK general anti-avoidance regime, and really we'd support extending that into Scotland. But nevertheless, as I say, the powers are there. If what you may perceive as avoidance, if you don't like it, you can change the legislation.
Yes, and I certainly hope we do. Could I hear from Michael Clancy, please?
Well, the society is quite clear that unacceptable avoidance is something which should be stamped out. And in the evidence which we are giving on the Revenue Scotland and Tax Powers Bill, we're currently looking at the provisions relating to the general anti-avoidance provisions. And I think in comparing them with the Finance Act 2003 current general anti-abuse provisions, we think that the provisions in the current Scottish bill are much better. They're less complex and should prove to be more effective. They're not, I know that the draftsmen will not like hearing this, they're not perfect, but they're considerably better than the current anti-abuse rule, which has been quite criticised by many people over the last few years. I think in terms of tightening up things for the provision in the Revenue Scotland bill, one would look at things like the enforceability arrangements and the inquiry arrangements to make them slightly more clearer, and to make sure that we don't get into a situation where Revenue Scotland is effectively taking on investigations which are improper. But we're quite clear on our position, and as the bill approaches stage 2, we'll be thinking about amendments which we'd like the government to consider.
Thank you. Thank you.
Right.
Yes, I think Elspeth Orchard.
Yes, it was just to add, yes, likewise we've been giving evidence to the Finance Committee. I think Scotland will end up with a broader general anti-avoidance provision. I'm hopeful that the government team and Revenue Scotland will take on board some concerns we're making about how to make it workable with some form of clearance process to give the certainty without, I suppose, removing the teeth of the provisions. Evasion is an interesting one, though, because evasion is criminal behaviour, and you don't get tax evasion without other forms of criminal behaviour. And that's an interesting area where you have to look at tax along with your other powers and the whole approach taken to criminal matters. But where what I think HMRC has done very well, and you might wish to get a copy of should independence arrive, is they have considerable software investment now into a system called Connect, which is data mining, which is actually looking for patterns of basically non-tax compliance, avoidance, but particularly evasion. And there's a whole raft of provisions and administration that actually has proved necessary to support challenging the illegal evasion. So that's just another thing for the to-do list, but it's one well worth bearing in mind, because that is a huge loss. That's a huge loss.
Thank you. Richard Baker had a supplementary.
Just a separate question, actually, if that's fine.
Well, I'll come to you in a second, otherwise you'll upset my flow.
Okay, no.
We are getting a little bit behind the clock, so we could sharpen up a bit on questions and responses. That would be helpful. Okay, Chick Rooney.
Thank you. I firstly apologise for shaking my head at Moira Kelly, because the reason for doing that is I just hosted a meeting of small businesses here 2 weeks ago, and they all seem to be looking at the opportunity rather than the problems that people associate with the change that independence will bring. I just wonder, after I ran these companies in Europe, I came back to Scotland to do company turnarounds, small businesses. The single biggest problem that small businesses, the ones that I was associated with, single biggest problem they had was dealing with HMRC and trying to find their way around all of the legislation and all the complications. I mean, what's your experience?
Tell me about it. It's certainly, with the various changes, new organisations of HMRC, back in the good old days, she said, certain things were great. You could get your local inspector and speak to him. He knew about you knew about him, how they operated. Those days are no longer with us, and it's a changing environment. And certain things are not so good, certain things are much better. I have to say that, so that one knows that a certain behaviour will be, you will get a certain treatment throughout the UK, where upon in the good old days you might not have, because it was down to the individual inspector. I think it all comes back to trying to make our tax legislation as simple and as certain as possible, so that businesses know. I'm banging the drum for this, but I think this is what small businesses need.
Thank you. I want to move quickly on to Ms Orchard. In your peroration at the beginning, you mentioned that if we reduce corporation tax, we will have to find increased taxes elsewhere. Of course, the elephant in the room is growth in the economy, which our childcare proposals, for example, that we just announced, are designed to increase the tax base, and while our immigration policy will also do so. I just wonder, though, the Institute for Fiscal Studies, which the convener mentioned at the beginning, said in their report on taxation, Scottish independence would provide an opportunity to make sensible changes to the tax system in Scotland that successive UK governments have failed to make, and it would enable Scotland to make choices about its tax system that more closely reflects Scottish voters' preferences. And of course, the tax system should be designed to improve productivity and the economy. In 2011, you said devolving tax powers is contrary to the goal of simplifying tax legislation and stability at a UK level. And you could question whether such a move would make the UK as a whole less competitive on the international stage. Do you still hold that view?
The context, I think you're talking about the 2011 paper, was opening up the questions for debate to put the issues on the table and really stimulate the debate as to what's happening. I think there are two things to think about. One is the longer term opportunity. So if you're 10 years down the line, say, what is the environment and the landscape? And there is opportunity for the things we've discussed, for simplification, administrative ease, etc., to be in place, lower administration costs, for example. But there is also a short-term piece, which is the transition, the complexity. Does that, as an economic upturn comes, does that put people off for right reasons or wrong reasons? But is that is that the response? And the answer actually depends on how the governments implement any such change. But that was put down to stimulate debate and ask some questions, but really put out the challenges that, yes, the opportunity is there, but it's just perhaps not dead simple. It's not
do you think on that basis,
simple.
just last question, Camille, do you not think on that basis it would be helpful for the UK government, as is, to negotiate, or at least have more communication and engage with the plans in the event of independence? I mean, our view in the White Paper is that nothing would change immediately, but over a period, and the period of time is, Margaret, is 5 years, that would actually help both sides, you know, Scotland after independence and the rest of the UK, understand what the implications of changing the tax system would be.
You're asking me a political question, and I'm here to answer on tax rather than politics.
Very good. Okay, thank you. Richard Baker.
Thank you, Convener. I think my question actually does go with the flow of current questioning, because perhaps I can address this to Moira Kelly. We've had a great deal of discussion about simplifying the tax system structure and how desirable that would be. But surely, by definition, for individuals and businesses working across the United Kingdom, if you have a new state within that market, which is operating a whole new set of tax regulations and systems, doesn't that introduce automatically more complexity? And also, given that it's a tax system which seeks, for example, to cut corporation tax, doesn't that increase the danger of avoidance as well?
Starting with individuals, yes, if you are having to, it may be that more individuals are drawn into having to file a tax return than are at present. Okay, there's that. There's the compliance costs that we've talked about so far. With corporation tax, if there are differential rates, we've mentioned before, perhaps there might be some kind of profit shifting to take advantage of it. And it's then just to have the legislation in both jurisdictions, shall I say? Because I think that one of the issues that we've got with transfer pricing, all of the talks, the headlines about transfer pricing, it's very easy to say, oh yeah, transfer pricing, this is terrible. It's companies taking their profits out of the UK, not reflecting that it's actually based on the tax legislation that we've got in the country. So it's up to the jurisdictions to actually get together and work out their tax, as David talked about OECD handling it, because it will come from the OECD.
One of the, assuming we have independence, one of the key documents, or one of the key things that's going to have to be negotiated here, is a double tax treaty between Scotland and the rest of the UK. Because that is going to determine, one, a lot of what tax is actually ultimately going to be raised in Scotland, but also it's going to begin to give a viewpoint or an understanding of the level of complexity that individuals and businesses may have to face. For individuals, it's going to be a matter of beginning to understand what defines them either as a Scottish taxpayer, what can potentially make them UK tax resident, are they going to have dual residence, have they got to start day counting, etc. Now, that, of course, principally applies to those who are working constantly cross-border. When we look at the flights flying down from Glasgow, Edinburgh and Aberdeen to the south every day, you know, maybe we'll have day counters at the airport to make life easy for us all. But nevertheless, I'm being flippant. But that certainly raises an additionality that people are going to have to deal with. Companies then may need to think about, do they need to have tax equalisation programmes for employees depending where they're working, because they will want to deploy staff from, say, a base in Scotland to the south and vice versa. And then from a corporate perspective, its understanding is to what extent, if I'm a Scottish company and start operating or continue to operate and sell in England, to what extent am I creating a permanent establishment in the UK, which creates a filing requirement in the UK? How do I allocate my profits to that branch, etc., and vice versa? And then you've also got the issue, which is beginning to dawn on some, is that within UK group environments, they can surrender losses from a loss-making company to a profitable company. Once you split the border, it suddenly dawned on them about where do these companies sit. And some have actually realised my loss-making companies in Scotland, my profitable companies are in England. And that has just increased their tax costs for them because I can't offset them. And also there's implications in actually Scotland's not getting much of a tax take. Of course, the opposite will exist as well. But it's all these kind of things which now people have to think about. And as I say, a lot of that comes back to that double tax treaty as well.
My final question, Convener, is on corporation tax, which has been a deal of discussion at this morning. Now, the Scottish Government has said it wants to cut corporation tax by 3% as an aspiration. But of course, there's a cost attached to that as well, of some £300 million, we heard from evidence at the Scotland Bill Committee, of which I was a member last year. Now, it seems to me that from the evidence we received in that committee, it's a fairly big supposition to say that the additional economic activity will result from that cut in corporation tax. So isn't £300 million on that policy quite a big gamble, given that that's 6,000 public sector jobs? I mean, that's a pretty hefty gamble to take, that cut in corporation tax will lead, and particularly in the short term, to increase revenues to the Scottish Government. Perhaps ask David Glenn that question.
I suppose difficult answering that, again, I don't think any of us are economists to be able to answer to what the precise impact would be. One thing I would point out, though, is there's been a lot of talk and concentration on the tax rate. Actually, what ultimately is of impact here is the tax base. And therefore it's in conjunction with what else may be done in conjunction with that rate of tax. In terms of, if I can think of a number of companies who actually pay a fairly low effective rate of tax, whilst we've got a headline rate of falling down to 20% because of things like the arrangements we have in place for the deductibility of interest in the UK, means that in reality companies quite often don't pay a lot of tax, and therefore whilst the underlying rate of corporation tax gets the headlines, actually what companies really look at is to understand what their tax base is. And therefore, it's about other things like capital allowances and so on.
Well, that argument then, the 3% cut in corporation tax may have very little impact on economic growth at all. If it's competing with those kind of allowances elsewhere.
It depends what else happens to the tax base.
Okay, right, thank you. Christian Allard.
Thanks very much, Convener. First of all, I would like to ask a question to Mara Kelly and then one question to Elizabeth Oxford. Ms. Kelly, first of all, what I would like to talk about is in the Fiscal Commission Working Group paper on page 11, we talked about the principle for a modern and efficient tax system in independent Scotland. One of the recommendations we did on that page 11, which is reflected in the Scottish Parliament white paper on page 123, I believe, is that welfare and tax policy should therefore be developed in tandem to ensure policy integration and alignment. Do you agree this would be a sensible way to proceed?
Yes, I think you have to look at it because the tax system does interact with various other systems, in particular the welfare benefits system. So we must take that into account when we are developing our tax policy and defining our tax systems, because unfortunately too often under the UK system, they work against each other. So we have to look at them in total. So, for example's sake, bringing the EU into this, there is the European Commission is consultation paper regarding the taxation of public bodies and the exemption in VAT legislation for activities in the public interest, such as medical care and education. And it's hoped that the abolition of the exclusions and exemptions for VAT for such activities will not only increase tax revenues, but they'll also reduce the complexity in the VAT regime. That all sounds very laudable until you think, wait a minute, it's going to, the lead on to that will be the complexity in the benefits system. So you have to look at it holistically.
And do you think we've done that? The Westminster government, successive Westminster government have done that so far?
Sorry?
Do you think successive Westminster government have done that so far? From my personal experience, like Chick, I used to run a small medium company, and we had, I loved to have the same person coming to my office all the time, and we didn't have that, and it became very complicated. But on the same way, as somebody was paying tax, and I had some problem with my HMRC. I found it very, very difficult to deal with, and not only as a small company, but as well as an individual. Is that something that...
I wonder if they do. One thing that I'm thinking about is the high-income child tax benefit charge. Again, laudable, but what does it do? It draws more people into filing a personal tax return. I think you have to realise that if you're playing around with one part of the regime, being the tax regime, there will be an impact on, because it's people, welfare system.
Thanks very much for that. And if I can go to Elizabeth O'Shetton regarding, you give in evidence on page 3, you stated that 2 key areas where attention might usefully be focused towards a business tax roadmap, and in focusing tax incentives to those who could provide funding to SMEs. And as I said to Maura Kelly, SMEs is something that's close to my heart. As you will be aware, the Scottish Government is committed to reducing compliance burdens facing small and medium-sized businesses, in particular, as set out in Scotland Future, a business plan for Scotland. What scope do you see for reducing compliance costs for small firms, and how well has the UK Government achieved this?
I think for the compliance costs for small firms, I suppose the position is changing over time. We do see there is scope to simplify the application of a lot of the detailed corporate tax rules. We're talking corporation tax, for example, by working more collaboratively with the tax authorities. That may mean more disclosure to the tax authorities. Once every 3 years, they give them a big file saying exactly what they're doing and how they're doing it and how their systems mean they will be compliant with their tax obligations, and then having a light touch and doing a much simpler approach for actually filing. We've recently sent a paper to HMRC on that, but they haven't had the opportunity, that was last week, to reply. So I can't see they haven't done anything with it. But I think that is consistent with their theme of trying to come back to having the right kind of relationships with taxpayers that can remove some of the administrative burdens. They've done that very successfully with large businesses. I think it's generally accepted as having been a success, but they need to roll that out as a perspective. So I do think there is opportunity to simplify the administration, but a lot of that, I think, is about the relationships that can be established with the tax authorities. And that may have both a higher tax yield, but it may have a bit of tax cost as well for the tax authorities in doing that.
Yeah, you're talking about a collaborative approach, but in your evidence, I noted that you said as well that the tax system could be used to improve private lending to SMEs. What do you see as the main obstacles to SMEs gaining access to finances just now?
We have within ICAS a small business committee of members very much in the same league, and they feel that as a consequence of the banking crisis and restrictions on the availability of bank funding, there has been a knock-on impact on how do small businesses get get hold of funding. They also are aware that they're large businesses, and there are those who are successful still, and particularly high net worth individuals who have monies, who would previously have perhaps put that in more regular bank deposits or savings, and the flow through the banking system isn't working. So if you're to look beyond that, not that we're necessarily into having another complicated relief, but if you're going to be flexible in the system, is there something the tax system can do to incentivise or focus in a structured way that surplus cash into those small businesses? We've seen the development of, I think, call it crowdfunding, an unregulated financial, well, until recently I think it has been unregulated, but is there a better way of doing that, and should the tax system play a role? And there's a feeling that it supports equity investment in small businesses, but why not different forms of funding?
Thanks very much.
Would you have a brief supplementary?
Yes, I'll be very brief. It's a question to Moira Kelly on VAT. I mean, in your submission you mention that the white paper states on page 315 that a VAT reduction on repairs and maintenance work to help culture and heritage is suggested. But by its very definition, you know, what qualifies repairs and maintenance, and what is culture and, you know, heritage, would leave open perhaps, you know, there are loopholes in there as to, you know, on the definition. So does that not add a complexity to the system than what we have already?
Margaret, you've hit one of the big nubs of tax deductibility here. When does a repair cease being a repair and being a capital improvement? And yes, it does lead to complexity. And in parts of the UK legislation, we have various sections to determine what is a repair and what is not a repair. I think sitting round this table, we all would say, I know what a repair is. But it's trying to get that into the legislation as to what would be qualifying, and that's where you start to bring complexity into it.
Mm-hmm.
All right, thank you. I'm conscious the Minister is hanging around outside the door for our next session, and Mike Mackenzie still at the comments. Over to you, Mike.
Thank you, Convener. And just really a couple of questions for Michael Clancy. You mentioned in your written evidence that, or you suggest that any decisions on what further devolution there will be needs to be taken on the basis of stability, practicality and principle. What test do you think ought to be applied to partial devolution of tax? I'm wondering, for example, if it's sensible to devolve income tax but not devolve the ability to expand the tax base.
I think we talked about principles earlier, and we focused on the idea of not only the ones which are in the white paper of simplicity, neutrality, stability and flexibility, but also the ones which we'd referred to as certainty, convenience, efficiency and proportionality. So I think in terms of devolving income tax, clearly there will be plans. Well, we've already got further devolution of income tax under the Scotland Act 2012, and that doesn't actually impact on the tax base in terms, although it makes definitions of taxpayers. And I think one has got to look very carefully at the definition of taxpayers there, because, as you know, during the Scotland Bill Committee examination of that, there were discussions about some of the issues which we've raised this morning about those who live in Edinburgh, work in London, and vice versa. There were issues around about servicemen serving overseas and the extent to which they form part of the taxable people in Scotland, perhaps even those, as we heard about your constituent, Mr Biagi, who works in the Danish zone in the North Sea, oil workers of particular cases. So I think whilst there may be difficulties, it's not impossible to make devolution of tax and touch on the tax base in that kind of a way.
I think what I was trying to get at more was the interconnectedness of tax, the tax take in general, and how that each tax interacts with other taxes, rather than the kind of technical difficulties. I think Christian Allard touched on this in terms of the integration of taxation and welfare. And what I'm really trying to get at, and perhaps we could widen it out to maybe other members of the panel, that how problematic in that regard do you see further but partial devolution of tax powers that make it, you know, that some parties are proposing? Do you think that's problematic?
I think matters are interconnected. I think it just adds a different dimension to the impact of the partial devolution. For example, if income tax rates under the Scotland Act at the moment are varied, where there are any benefits that are paid according to net of tax income of a household, to be honest, if the Scottish tax goes up or down, the benefits adjust accordingly and the impact isn't felt. You then need to decide if there should be an adjustment in the benefit system to pass any benefit or share of cost on. And that means there's a change to the welfare system to be considered. It doesn't mean it's impossible, but it just means there's a different dimension. And you would have to look at the different touch points to consider what was the impact overall on the total tax take and the total benefits cost, I suppose, is the way you look at it, as well as the household impact. So it's a dimension, I think, rather than a complete blockage to anything.
And last question, convener. Of course, I wouldn't dream of asking any more than this final one. It's just back to Michael Clancy again. And you, in your written evidence, you'd said that you know, whatever the outcome of the referendum, there's or in the event of independence, that a tax system that's tailored to Scotland and to Scots law is essential. And also we've heard earlier on about tax expertise having been to date pretty much centralised in London. How well, just given these considerations, how well do you feel that the UK current taxation system serves Scotland?
I take as my example the issues about stamp duty land tax, which when it was introduced we found that quite difficult to deal with because the forms were written according to English legal terminology and referred to, for example, freehold rather than, as in those days, it was feudal tenure in Scotland. So it's things like that. It's a sensitivity to a different legal framework and environment which one might be looking to. In terms of those aspects which might, one could say, be governed by what could be described as UK law, such as company law, there aren't that many substantive differences between the law in Scotland applicable to corporations and the law in England and Wales applicable to corporations. So I don't think that sort of thing creates as many difficulties as we've seen in these other areas, which touch on areas of the law which are specifically Scottish. And as we move to the land and buildings transaction tax, some of the issues which we had found relating to stamp duty land tax have been dealt with because of dealing with people in the Scottish Government, civil servants and others who have a sensitivity to the legal backdrop in Scotland.
And just to expand slightly on that, in terms of land and building transaction tax, you say the way the Scottish Government dealt with that gives you hope. Could you expand on that just a wee bit, please?
Well, I think when I said hope, I meant in attitude for discussion, but it was a general hope about the attitude of politicians to making law that was, I think, my more broad point. And it's very very appropriate of you to focus on the issue of hope in terms of dealing with legislation. But experience is the other thing which triumphs frequently over hope. So I think we've got to bear in mind that when you're dealing with legislation, it's an art and a science. That there are many contending factors. The desires of political parties and politicians balanced against the desires of those who will be affected by the legislation, and it is a balancing act which we all have to participate in fairly.
All right. Briefly, please, and Moira Kelly.
Can I just add one thing, Mike, to that? And this is not to do with Scots law, it's to do with commercial practicalities. I deal a lot with innovatory tax reliefs up in the North East, and it humbles me to see what some of our companies are achieving up there with innovation. However, the new patent box legislation, which is in, it ignores that the way that a lot of companies actually generate income in the North East, in the North Sea, is by renting assets to other companies, and that is not included in patent box tax relief as qualifying income. There is a backdoor way in, but it's not as good a benefit as this. And I would hope, if we are drafting our own legislation, that we take account of what are practical considerations in Scotland.
Thank you. That's very useful. Thank you. Okay, we've run a little bit over time, but it's been a very useful session. So thank you all very much for coming along and helping the committee. We're very grateful. We'll now have a very short suspension to allow a changeover.
You're off.
Right, okay, if we can reconvene. Item 2 on our agenda, we're taking evidence on the Renewables Obligation Scotland Amendment Order 2014 in draft. I'd like to welcome the Minister for Energy, Enterprise and Tourism, Fergus Ewing, who's joined by Olive Hogg, Solicitor, Directorate for Legal Services, Scottish Government, Fiona Hepplewhite, who is Policy Manager, Electricity Market Reform, and Neil Rafferty, Deputy Head, Energy Policy Unit. Welcome to you all. Minister, do you want to say something to introduce this?
Yes, thank you, Convener. I mean, I just come fresh from the launch of Bannockburn Live, which is going to be a terrific success, as I know, Convener, we all wish it to be. So thank you very much indeed for this invitation here this morning. The Renewables Obligation, or RO, drives investment in renewable electricity capacity across the country. Since its introduction in 2002, the renewable electricity capacity across Scotland has almost quadrupled. Indeed, the final figures for 2012 show that renewable generation accounted for an equivalent 40% of gross electricity demand, putting us well on our way to achieving our interim target of 50% by 2015. We need to ensure that this upward trend continues. We want to see more generation coming from onshore, offshore wind, wave and tidal energy, sources where Scotland has a huge competitive advantage and can create world-leading industries. Of course, the renewable obligation mechanism is due to be replaced by a new system of support based on a contract for difference, and I'll go on to talk about that later. The amendments contained in the order before the committee today are designed to ensure that the RO legislation remains fit for purpose and to ensure that we continue to attract investment in new technologies and developments across Scotland in a way which is both cost-effective and sustainable. Convener, as is customary, we have proposed the same amendments generally as will apply across the rest of the UK. This approach is favoured by a majority and is fundamental to the successful and effective operation of the mechanism. However, as has been the case on previous occasions, there are some very important exceptions to that approach. The most prominent of these is our decision to introduce 2 new bands to provide additional support for innovative offshore wind generation, both from test and demonstration centres, and secondly, pilot projects comprising of non-fixed or floating turbines. These new and higher bands are explicitly limited to apply to offshore wind turbines which are innovative and new to the marketplace. They are aimed at reducing the costs of generation from such sources, enabling them to make a greater contribution towards meeting our binding EU targets. Already we have seen, Convener, a commitment from Statoil to develop their Highwind pilot project off the coast of Peterhead. And in the coming weeks, the Crown Estate's leasing round for floating offshore wind will conclude, and we hope to see a number of other developers securing exclusivity rights to pursue developments in Scottish waters and bring economic benefit to these shores. The new offshore bans have been introduced and costed on the basis of the capacity which we expect to come forward between now and the order's closure in 2017. There are no limits or thresholds within the provisions themselves, however. The remaining changes set out in our amending order mirror the changes being made to other UK obligation mechanisms. Now, on enhanced biomass sustainability criteria, the first of these relates to tighter biomass sustainability criteria. The committee may remember from last year when we introduced a 15 megawatt cap on biomass that we were considering the introduction of tighter sustainability standards under the RO. This order introduces these changes, which are designed to ensure that biomass material is sourced responsibly and in a way which minimises and eliminates any adverse impacts. The order specifically amends information to be provided to Ofgem by all stations over 50 kilowatts which use solid biomass and/or biogas on a per consignment basis. This includes the introduction of a timber standard focused on sourcing wood from legal and sustainable sources and a tighter greenhouse gas threshold for dedicated biomass stations accredited after the 1st of April 2013. It also creates a new requirement for generating stations of 1 megawatt and above to provide an independent sustainability audit report for solid and gaseous biomass, reporting against greenhouse gas, land criteria and the timber standard. These Reporting and audit requirements will enable generators to become familiar with the sustainability criteria before further amendments which were made next year to make compliance with the sustainability criteria mandatory for generating stations of 1 megawatt and above. The order also refers to the latest combined heat and power quality assurance standard, which have been tightened to reflect improvements in the efficiency of such schemes. As the committee knows, the RO mechanism is due to be replaced by a new system of financial support based on contracts for difference. The process of reforming the UK electricity market seems to be have been running for as long as most of us can remember, and there are still important decisions to be made. We have expressed concerns that the design and limits of the contract for difference mechanism will restrict the opportunities to develop the renewables industry in Scotland, and as a result we risk losing out on both jobs and investment. We continue to press the UK Government to provide a clear and ring-fenced commitment to support the delivery of meaningful renewables capacity. UK ministers have taken powers in the Energy Act to close the renewables obligation across the UK, meaning the RO in Scotland will close from 2017. The next 3 years will be an important transition period as developers and investors adjust from the tried and tested RO to an entirely new and innovative CFD. This order will partly implement these important transition arrangements. They are, convener, largely technical changes, allowing developers to make a one-off choice between the RO and the new CFD scheme in certain circumstances. The changes will also prevent duplication of support for the same electricity by ensuring that generation supported under the EMR is not eligible for ROCs. In conclusion, convener, these changes will improve the efficiency and sustainability of the obligation and ensure that the legislation remains fit for purpose. In the remaining time available for the RO, we want to continue to attract investments in the right kind of projects and continue the progress which we are making towards our important targets, whilst increasing costs to consumers to a minimum. Before I formally move the motion recommending the order, I'd be happy to respond to any questions, convener, which you and members may have. Thank you.
Great. Thank you very much, Minister, for coming along for that detailed explanation. Happy to hear from members who wish to ask questions. Marco Biaggi.
Yes, I just have some questions about the biomass, which has been an issue I've followed in the past. You referred in your opening and in the note to the latest combined heat and power quality assurance standard, and that having been tightened to reflect improvements in the efficiency of such schemes. Could you just clarify that in some more detail as to how it's been tightened?
Well, it's been tightened with a new requirement for a minimum heat efficiency of 10%. That's a new requirement. In addition to that, the Combined Heat and Power Quality Assurance Standard, known as the CHPQA to those in the know, includes a minimum primary energy saving of 10% and an overall efficiency of at least 35% for schemes of more than 25 megawatt electricity capacity.
And following on from the consultation that was held, have there been further discussions with the wood panel industry about concerns over supply, and is that something the government intends to continue to monitor on an ongoing basis?
Well, I've had extensive discussions with the timber product sector, including wood panel, and we think of Norbord in my own constituency, and Egger in Ayrshire, and Norbord indeed in, I think, Pleen as well in central Scotland, and also the wider sawmill sector. In addition to that, of course, the timber growers have a plain interest, as do the forester sector as well. And this is an extremely important topic where obviously we want to make sure that the interests of all those who require to source Scotland's timber for various purposes can be accommodated. And in particular, the analysis of the supply side suggests that over the next 10 years, additional availability could average from between 700,000 to 1 million green tonnes per annum, compared with current production. So that does suggest that wood fuel supply should not pose a barrier to further development of the heat sector in Scotland, especially since we have the cap of the 15 megawatt for CHP electricity only schemes, unlike south of the border, which I think is a further safeguard. And of course the CHP schemes approved in Grangemouth and Rosyth also have the requirement that there must be a strategy which must be approved by Scottish ministers, and the intention there, I think, is to import timber rather than to use homegrown timber and risk displacing the legitimate interests of the timber and panel product sector. So we will, of course, keep this closely under review.
And I was particularly interested in the sustainability audit report requirement for the biomass stations. Is that going to be like a broad requirement for them to report? Because I know there have been criticisms of some of the off-the-shelf sustainability accreditation methods that there are from NGOs in particular.
Yes, I believe this new audit requirement, which is being introduced by the RO, will be applicable to certain schemes, and with your permission, Convener, I think Fiona Hepplewhite, one of my officials, will be able to give a little bit more detail to Mr Biaggi, if that's in order.
So the independent audit requirement for biomass will follow a similar programme to the bioliquids audit report that is currently in place at the moment. And basically they'll need to report on land criteria, greenhouse gas, all the things that they report on a monthly basis. And it'll be independently verified by an auditor. So yeah, it will be a kind of robust audit of the monthly information that's provided, and in a year's time that'll be mandatory linked to ROC issue.
Okay, thank you.
Thank you, and good morning, Minister. On the biomass sustainability, the bullet point, amendments to land criteria so that energy crops grown under the Energy Crops Regulations 2000 or an equivalent scheme are automatically treated as meeting the land criteria for solid and gaseous biomass. Could you perhaps expand on what would be involved in that particular automation? You know, does that mean there's no checks carried out on, you know, this actually happening? It would just happen?
Checks carried out on what?
Yeah, well, exactly. What would the checks?
No, what is your question?
That is my question. I mean, if it's automatic, there's not going to be any checks carried out to see if that's the energy crops are complying with the regulations, 2000 regulations.
Well, I mean, I'm not absolutely sure I understand the question. I'll maybe bring in Fiona Hepplewhite with your permission at the moment, Fiona, but the provisions which are being introduced are consistent with those which are being introduced across the UK after extensive consultation with all stakeholders involved and a great deal of thought, and they involve a cautious approach designed to ensure that appropriate sustainability standards are applicable here, which apply, I think, more generally across the sector, and that new sustainable forest management criteria for the use of wood fuel are, if you like, prescribed and introduced by these regulations as set out in the timber standard, a process with which I think those in the industry are already familiar. But if I may, maybe Fiona Hepplewhite might be able to provide some more information if that would be helpful.
So just to say that the energy crops regulations are actually English regulations, and the other schemes was designed to include any schemes such as the single farming payment that might take into account crops that were grown in Scotland. But any information that would need to be provided would have to go through the audit report, and it would go through the land criteria that Ofgem collect. So it's not an automatic guarantee that it would be under that, but it's a scheme that would be open to, if it's been supported under other government schemes, then it would meet that land criteria, yes.
Good afternoon. Mr Rafferty. So I'm currently, I've been asked to look at a company in my patch which is doing, in fact, which has created a submersible offshore turbines. I wonder if you might, or have one of your officials, expand upon what this order means for innovation. I know you did allude to it. I just wonder if you might be able to expand upon that.
Yes, well, the order, as I explained, offers two new bans for innovative offshore wind, which will apply to Scotland only. And to expand, the detail is that the band of set at 2.5 ROCs aims at supporting generation from offshore test and demonstration sites deploying innovative, new-to-market turbines, and a band set at 3.5 ROCs for pilot projects consisting of turbines which are not fixed directly to the seabed, e.g. floating turbines or those deploying tension deployment systems. Now, these are therefore two particular measures, and let's take each of them in turn. It's key that in order to develop and reduce the costs of offshore wind, that there does need to be test and deployment. That is part of a process, engineering process, of testing process, of getting the cost down. We are fortunate in having Andrew Jameson of OREG in Scotland, who heads up the Catapult, whose efforts are devoted solely to reducing the cost of offshore wind. And it is believed, I think, by the majority of people in the industry that it should be perfectly possible to reduce those costs, but there are challenges. And a necessary, essential ingredient of meeting those challenges is to test the products. It's impossible to try out new designs of turbines unless there are testing and demonstration sites. It's commercially very difficult, if impossible, to do that entirely in a commercial setting, and therefore there needs to be a particular stimulus for test and demonstration sites. I think that's a fairly widely accepted analysis. Now, the second, for the test and demonstration provision, the second provision, why are we doing this for floating offshore? Well, there's a number of reasons. Firstly, in Scotland we have deeper waters, and therefore if one thinks about it, the costs of deploying fixed turbines are, in the case of deeper waters, going to be inherently more expensive, because you need to use more steel, more concrete, more difficult conditions, and therefore greater costs than perhaps some of the alternative fields, convener, in England, to take our neighbours as an example. And therefore it was put to me shortly after I became Minister in 2011 by actually Fred Olsen, as I had enjoyed a breakfast with him in Orkney, actually, after having visited EMEC, I think it was, that one thing we might want to consider in order to promote Scotland as an area for floating offshore is to consider bringing forward a scheme which will allow us to be the test centre for floating offshore wind turbines. Now, I should say, I mentioned Statoil in my introduction. Statoil have pursued their Hywind project, since I think around 2009. That's been a demonstration of a floating offshore turbine which has succeeded in the sense of having very high reliability rates of generating electricity. Now they want to use a site called the Buchan Deep off Peterhead to move to a next phase of that demonstration of their floating offshore turbines. The reason for that is that they want to try it out in the more testing waters of the Buchan Deep, and therefore they want to do this in Scotland. And we are hoping that they will also be encouraged and persuaded to use a number of Scottish businesses and a Scottish port, the Port of Kishorn, at which to carry out a substantial part of the work that will be involved. There's a second rationale, convener, which is this. At the moment, as is known, most of the major offshore wind applications are on the east coast. That is for reasons of substantially of proximity to ports, but also the nature and conditions of the sea. The conditions on the west coast are even more challenging. However, if the floating offshore innovative technology can be further developed, and it's already a success, it's not a prototype, it's already generating electricity, that then would open up possibilities, subject of course to respecting the legitimate rights of fishermen who've been there for centuries, and I must emphasise that, of considering options for deploying turbines on the west coast of Scotland as well as the east coast. So in those two respects, I think we have a strategic interest and objective in taking forward this measure. It's particularly appropriate to Scotland for the reasons that I've mentioned, and we would like Scotland to be at the centre of what could be a very exciting new method of harnessing the power of the wind offshore.
That's very encouraging. Thank you very much for that. That certainly casts a brighter picture, or paints a brighter picture for the company concerned.
Okay, can I maybe just ask a couple of questions just to follow up with the enhanced ROC payments for experimental offshore wind. I mean, I think everybody is very supportive of the principle of developing offshore wind and with a view to reducing the costs, which are at the moment quite substantial, as you're aware. I'm aware of 3 test sites, either proposed or in construction, one at Methil, one at Hunterston, and one just north of Aberdeen. Would these sites benefit from this proposal?
Well, if developers wish to deploy or continue to deploy turbines that meet the provisions in this RO, then yes, we would expect the answer to be yes. And indeed, the developments at Hunterston and Methil, I think, have been broadly welcomed by all political parties as part of a necessary process, as I've described, convener. So we would expect the answer to be yes. And I am not quite sure to what extent I'm permitted to comment about the Aberdeen case, given that it still is sub judice, so I'd better leave that. But as a matter of, I better just not comment on that, if you don't mind, which is the approach that I've adopted before, and I think was remarked upon favourably by my learned friends. But as a matter of general practice, test berths, offshore test berths, are required because testing is required. So we need to find places to do it. We have found places to do it, and now we want to move on to the next stage and actually see it done.
Just on the question of public resources supporting these projects, I mean, I do know that there have been various pots of money that have gone into this from Scottish Enterprise and perhaps European funding. I mean, can you tell us how much money has been, how much public money has been spent so far on these projects?
Well, I can go away and come back with a note, convener, to the committee, because I think, you know, if we're talking about Hunterston, Methil, Aberdeen, dealings with companies, I think, you know, I don't have that information at hand because it's not perhaps immediately germane to the RO. I think, however, I mean, I can say that, and this is a matter of some public interest, that the cost of the total RO in the UK, everything, every single rock, every single megawatt of electricity generated from renewables in the UK costs £27 per household, set to rise to £63 by 2020. The cost of this measure we introduced today, were it to be adopted to its absolute maximum, would add 60 or 70p to that.
Okay, if there are no other questions, okay, we will then move to the next part on the agenda, and I would, in that case, remind the Minister's officials they can no longer participate on the record, and I would invite the Minister to move, and if he wishes, speak to the Renewables Obligation Scotland Amendment Order 2014.
I'm happy just to formally move.
Thank you. Minister, do any members wish to comment? If not, assuming you have nothing to add, Minister, we will just move to a vote. The question is, the Economy, Energy and Tourism Committee recommends that the Renewables Obligation Scotland Amendment Order 2014 in draft be approved. Are we agreed?
Agreed.
We are agreed. Thank you very much. I would ask committee members, are they content that the convener and the clerks produce a short factual report and arrange to have this published?
Agreed.
Thank you very much. Thank you very much, Minister, and your officials. Thank you. You're free to. We will just continue, but you're free to leave.
I will depart. Thank you.
Thank you very much. Right, we are still in public session. I remind members we're now on item 4 on the agenda. Item 4 is consideration of the land registration, etc. Bracket Scotland close bracket Act 2012 bracket commencement number 2 and transitional provisions close bracket Order 2014. Members will have seen this circulated in their papers. Do any members wish to raise any issues in relation to this? No, thank you. In that case, are members content this instrument comes into force? We are agreed. Thank you very much. Okay, we now move into private session. Just before we do that, I would just like to put on record our thanks to Stephen Emery, our senior clerk. Stephen is moving on to pastures new after a long service for this committee. I'm not sure if that entitles him to a medal, for long service. But I would like to, first of all, express our thanks on the record to Stephen for all his years of service to the committee and his support to all of us, to myself as convener and to the other members. Wish Stephen every success in his new position.
Absolutely.
Thank you. Thank you. And with that, we move into private session.